Charlie Munger and Warren Buffett says that only owning one stock is enough to create wealth. And what else they say, they say put your all eggs in one basket and look them closely. You tell me, if you put all your eggs in one basket and something happened, your wealth can be destroyed in minutes. Are they saying right? They might be, because they say something one thing extra too, which is concentration is for creating wealth and diversification is to protect one. So it's on you, it's on your target that decides the amounts of company you should own. Do you want to create wealth? Do you are in the game, in the line of becoming a great investor, or already you are a great investor and you want to protect your wealth? Already your money is that much, or your age is that much that you can't handle the volatility? The answer lies in that. If you are in the game of creating wealth, if you are like me, which you would be, I guess that's why you are watching. So for you, owning 7 companies, 5 companies is enough. If you go to own more than them, then what will happen is you want, first of all, find good companies, more than 5 in a particular period of time, and which will lead you to owning junks, owning craps, or owning mediocre companies, which won't result you in a multi-bagger result, which will only result you in 15-20% CAGR, not 30-40%. Same for if you are a little aged, or if you are uncle-like person, then if you don't set a limit on owning companies, then what can happen is anybody will come and tell you that dish for say Bablu ji, I think that you should buy Ramu Shyamu, Sri Ram Shyamu, Sri Ram Shyam, Jai Sri Ram, Jai Sri Krishna, particular limited company. This company is very good and this will lead you to a multi-bagger result. In the past it was already been gotten to 100, now it's trading at 50, it will go to 500, I am telling you, it's my guarantee. And they will make you buy that company. Or not that much, then you may hear a company in the news, in the TV channel, in the YouTube channel, or you may notice from your own self and think this company too seems good, this company too seems good, this too. You may buy all them and create a junk pile inside your portfolio, which will lead to mediocre returns, and sometimes it may even demolish your returns. Very sad thing. So that's why setting a particular limit, doesn't matter what your limit is. If you are a particular person, then not more than 30 stocks or 20 stocks. Why? Because managing them, looking all annual reports, going to all AGMs and knowing what every company is doing, what they are planning, means becoming a part of that companies will become impossible for you. You would not be able to know and track them, and those two words are getting mixed inside my mind. So that kind of thing doesn't happen. It's greater that you own 20 or 15 stocks. If your style is to play little defensive, protective, then you will choose the best of the best companies too, and you would save time too. Now if you are little aged or you are learning, then in those kind of situation, what happens, what we get the answer is you can own 50-60 companies. Why? Because at that time you are buying, you are seeing, you are noticing, you don't know much. It's better to have a diversified portfolio to learn. Otherwise, you are just in the game of protection of wealth, then simply buy Nifty 50 ETF of mutual fund or privately managed fund, whatever. Because after a pint, which would be of 30 companies, doesn't matter whatever advantage you have over mutual funds, it will start bottom lacking, and it won't be the worth of your time, your very precious time, the time in which you will earn the money from your 3 months salary to buy a diamond and give to your girlfriend. That time is where you will smoke cigarette, where you will do Netflix and chill, the time where you will open Chrome, the time is very important. So save the time over not banging your head. If you from your own want to own a lots of company, but from not your own, not from your learning, for your learning, or from your any circumstances, if you are in the game, you have some experience, or you have learned, you have the theory, it's now the time to apply it, then try to find good companies with great stories and fundamentals and reasonings, all those with great management and valuation, and try to buy the best one among them, the best 5-1, best 3-1, 2-1, 1-1, whatever, and however amount of company you find, and on which you have the best conviction on, and track them closely. Bet and sleep and eat, wake up, see, sleep, eat, wake up, sleep, eat, and wait till it gets upper circuit, till the results comes out. Wait 5 years to see your company getting proved a multi-bagger. You may all say that, and a question too arises from there, that what if I buy one only single company or 5 only companies? What if in them 2 companies got out to be a rubbish company, they didn't got out to be a multi-bagger? Then how I would enjoy the profit, how I will get the multi-bagger? All my portfolio's return will get demolished. Then yes, it is true, it can happen that all of yours returns can get demolished. But the thing is, if you want that, you want to be in the game of 60%, 40% CAGR giving companies, then 17%, 20% you will automatically get, even if the economy is bad, even if the company's management gets bad or business gets bad, something even worst happens. If you are in a protective game, if you are in a game which has baseline, it's not cyclical, it's not on air, it's consumer company, it's pharmaceutical company, many companies are like that, which have a baseline which people have to do, doesn't matter, and this has brand reputation and such, so the chances of failing get very less. At the time, even buying 5 companies, buy great companies with a growth potential of 40%, even 4 fails to deliver your promise, you will end up, then the more return of the mutual funds, you will end up not with 40%, then with 30% CAGR, not with 30, then 20, then with 17, with 10. It's not the worst. You will learn something, you will gain something. And the wealth is built by having less companies only. If you buy many companies, the thing I already mentioned, you won't find such, then you will settle for less, then the less companies will bottom lack, your portfolio will create a less return, which will not give you wealth. What you may say, and the question 2 again arises, that then if it is the case, why Vijay Kedia ji, Ramdev Agrawal ji, Warren Buffett ji and all such others don't have one single company in their portfolio? Why they have multiples? If it is the case, if that is the truth, then they too should have that many amounts of companies. But for them, there becomes a bottleneck too. There becomes a problem too. They can't from their will have one single company. They have the responsibility first of all. Second of all, for Warren Buffett, it's the greatest, the priorities thing, which is responsibility of his honor, of his respect, and of his money where which he has borrowed from the insurance payers and the shareholders. But for Ramdev Agrawal ji and Vijay Kedia ji, who own private portfolio, for them too the risk of failing becomes very great. And if they from their will try to buy one single company, it will become like Abhimanyu. What happened? And Abhimanyu was in the team of Arjun's, and the Pandava, when Abhimanyu was in the game of Pandavas, Arjun's and Kauravas, he went to fight with the Sakuni, trapped him inside a Chakravyuh where they let them in, but he was knowing that how to enter the Chakravyuh from hearing it from the mother's womb, whatever it's called in scientific language, from the mother's uterus, where his father narrated it, and he entered. But here his father didn't got the time to narrate him the full story, so he didn't know how to enter. He didn't know that how to exit. He know how to enter but not the exit, making him get killed. That should not happen with them, with Vijay Kedia ji, with Ramdev Agrawal ji, where they are able to enter the stock, and when they get the day to exit it, they are not able to. Because first of all, when they will sell, they will create a panic in the markets, and if it's a small cap plus they have large amounts of volume, that big name to create a news in, it will always be available in a circuit and they won't be able to sell it. Thank you. I hope you have liked the video. If you have, then like, and if you have even more, then subscribe and check out my channel. There are many great videos, you can watch them, and 2 trailers are here. Thank you.